Good morning, and welcome to the Financial Pillars All About the Money podcast, presented by Our Neutral Voices Media. Our show is all about helping our audience understand money, mindsets, and tap into the economic knowledge that builds financially secure individuals, families, and communities. So whether you're tuning into our show to learn about budgeting, building credit, investing, or starting your own business, we're here to break down the knowledge in a real and relatable way. Before we get started today, Pastor T, you want to bring us in with a little prayer?
Sure. Okay. Let's bow our heads. Dear Lord, thank you so much for waking us up and starting us on our way. I know it's been a while since we've been together. I'm glad that we were all able to make it to our destinations this morning safely. And I'm thankful that you've protected us in our journey as well too. I pray that you allow us to give our knowledge to the masses so that they're able to use these to make better financial decisions in the future so that they are better set for success. In your name I pray. Amen.
Amen. Thank you for that. So, few introductions here. I'm Ryan Leopard, private banker with Star Financial Bank.
JJ Foster, loan mortgage originator, Lake City Bank.
Terrence Bush, personal banker with Star Financial Bank.
Ben, branch manager, Flagstone Bank.
Thanks, Ben. You always get away without saying your last name.
Yeah.
You know that? Yeah. All right. So welcome back to our show today. Today, we've talked on the show before about banking fraud and debit card fraud and credit, things like that. But we never really talked about like investment fraud. So Ben, I know you kind of came up with the concept for today's show around investment fraud, and more specifically like cryptocurrency scams and things like that we want our viewers out there to kind of be aware of. So kind of kick it over to you and your thoughts on that, what you kind of are seeing, at your branch.
Right. Yeah. So, last week we had a good conversations on inflation, how it has affected daily living and cost of living for people. And there's also an increase now where people are trying to increase income or maybe try to increase earnings and things like that. And there's a pick now with investment fraud and just more so creating an awareness that, okay, there's Ponzi schemes out there, there's cryptocurrency, there's heavy, exaggerated type of returns that may make people get attracted to putting their money. So the goal for today will be to create awareness and also provide people with tools to understand what they need to look out for when they're looking out for a financial advisor, to understand types of investment that they're doing, and also understand more so the common investment scams, what to look out for, how to protect themselves and family and friends, and just be more empowered.
Gotcha.
Yeah.
So one thing that intrigued me about that, because I don't know a whole lot about it. I know about cryptocurrency, that type of stuff, but are you seeing like an uptick in specifically cryptocurrency scams, and what do those look like?
So generally, it all depends with where it's all stemming from. A lot of people potentially would be maybe they're trying to invest more or maybe just get heavy returns. So it's scattered all around. It could be more so through cryptocurrency. It could also through exaggerated or initial IPOs that are fake. It could be from just all sort of schemes where people are just told, put your money here, you get this type of return, and it never happens.
Gotcha.
Yeah.
Okay. Terrence, you seeing anything with your interactions with your clients, things like that? Investment fraud?
In terms of investment fraud, since we do have an expert that we typically do let handle those specific conversations, in terms of adding to the conversation, the types of fraud that I experience, of course, that's a everyday banking fraud as far as sending money to people that you think or giving people your account information, giving people your debit card credentials. They go hand in hand, of course, the same way that fraudsters and scammers are able to build the trust in people before they're able to get the funds out of them. It goes hand in hand with the retail side as well, too, as far as your account and your banking as well, too. So in terms of the investment, of course, we do see people giving their trust to people that don't deserve it, being convinced that this is the right move for them to make.
Key component
of
fraud.
Course. Yeah. And of course, as it goes back to how we always talk about having a relationship with your banker, of course, as well, too. I'm just going to small thing I would throw out there. If you are looking to potentially do things regarding investments, if you can find somebody in person, I 100% say go with somebody in person. Over the phone or electronically, not really a fan of that. If that's your tech savvy and you're okay with that, by all means, go for it. But meeting somebody in person, I would say, also alleviates a little bit of the skepticism of somebody potentially trying to scam you.
Gotcha. JJ, as far as investment fraud goes, what kind of is your experience or knowledge around that? You got specific types of those that you...
Yeah, it's funny, like you said, when Ben originally said, hey, you wanted to address this topic, and then you get off into it, you start to research. The first thing that stood out to me is funny is when you talk fraud, the baseline is the same. That sense of urgency, that pressure. You got to act now, and you have to do your diligence to find out, to make sure that it's legitimate. I love what Terrence just said. Yeah, talk to somebody in person. You're talking to somebody through on the phone or through an email that you don't know what this person's credentials are. Are they real? What are their true intentions? I guess even if somebody comes, because there are people that's going door to door these days that can come out and talk to you. But, there's certain mechanisms that are in place. Make sure you do your research, do your due diligence to look up, see if somebody is a licensed broker. There's something with investor.com, FINRA broker check. Look at this stuff because people are licensed, just like all of us are. There's a database that can look and make sure we all have, our licenses and we're registered to do what we do. Make sure you check it out.
Yeah, I'd say, always have your antennas up. If anybody's ever calling you, emailing you, anything like that, to kind of, they may be calling you about something that you did or something you may not have done, but ask questions. So this example happened yesterday for me. I've been trying to book a cruise through the cruise line's website, and it's been failing on me. I couldn't pay for anything like that. So I've gotten a few calls from a Miami number. So I answered the call yesterday because I'm having difficulty with it, and we go through and I'm talking with the guy, and he wants me to give my credit card to pay over the phone, which would be ideal. But in thinking about it, this is probably legitimate, but ultimately I don't know you. You don't know me. You called me. I didn't call you. Can you give me a safe, secure number, like an actual verifiable number for your cruise line that I can call you back and continue this conversation? Do it. And he more than happily did that, right? Typically, a fraudster is going to say, no, it's fine. I can do it. I can do it for you, or try and do something to keep you on the phone, not proactively say, hey, here's the number. Call us back on this, that you may not get a hold of that person, right? But keeping your antennas up when you're talking to anybody will be a key factor in not falling for a lot of these fraud scams, right?
Yep. And if I can add on to it, would be when the deal is too good, think twice. So,
oh, absolutely. Yep.
I've seen a lot of people, just exaggerated returns where somebody's told, oh, you can earn 30%, 40% in 10 days if you invest in this, or give me your money and I'll double it up. And so just more so understanding the fact that, okay, they have really good returns, but also what is really practical. And for someone who is seasoned or who is also not seasoned, just to be aware of the type of investments that they're doing. A lot of investment frauds pretty much are heavy on cryptocurrency. Obviously, you have to be aware on everything else. And a lot of people may come up and introduce more so like an IPO, where they're saying, well, this is a really good opportunity to invest in this stock. It has not even been on the market yet. It's a really good opportunity to tap onto it. The moment it hits the market, you're going to get 40 to 50% type of returns. And so it makes people vulnerable because one, like JJ said, that sense of urgency, they create that and they make it feel, one, it's a really rare, unique opportunity. They make it sound like you're selected for it. We chose investors just like you, or we chose people like you. We work with people just like you, and it makes them vulnerable. Maybe it make them feel special to participate into something like that. And so it draws down to now when somebody calls you randomly, is to just be aware of the things that you're sharing over the phone and being as practical. Or if you're doing the investments yourself and maybe you're trying to go through like an online platform, would be making sure that one, when you Google something, you're making sure that it leads you directly to that website for that broker. So what are things that someone would need to look out for when they're presented with an investment? I always say, one, request a fund fact sheet. What that is it's pretty much 10-year average return. It will show you what the stock you're investing in. It will show you what symbol it is. It will show you what the expense ratio it is. It will show you the market exposure of that fund that you're investing in. It will show you the market managers of those the fund managers of those funds. And it is something that with utilizing that symbol, you can look it up and see, one, if it's backed by. And so key thing would be, one, the platform, it has to be a platform recognized by SEC. It also, the broker, the people who are the fund managers, like JJ mentioned, looking them up on broker dealer. Like if you just search broker dealer, it brings up this page where you type in their first and last name, search. One, it shows the licenses that they have. It shows the state that they're licensed to practice. It also shows the disclosures page, which the disclosure page is very important for everybody. I always say, look up the disclosures and just see, because any complaints that was done either in writing, whether it was found or not, it goes towards the disclosure. And that is part of understanding that you would need to know the important information that you would need in order to do that. If anyone is meeting an advisor in person, those are things that then they could also say, do you have any disclosures? What are your fees with this fund? What am I investing in? Can I have a fund fact sheet? Something that you can go and take and compare notes with either other broker dealers or do more research on your own.
Yep. So typically, when you look at red flags, when you mention guaranteed returns, be skeptical of anybody out there trying to solicit an investment from you who's offering you guaranteed returns, because I think that's contradictory to what investment actually is. There's always risk that's involved with investing, right? You could lose, you could win, but anybody offering you guaranteed returns, you should be skeptical of. When you're also out there talking to financial advisors or interviewing for financial advisors to see who's the best fit for you, that's the same thing. They're going to traditionally tell you, hey, this fund has traditionally or historically performed to this percentage, but we can't guarantee it's going to continue that. But they will provide you those fact sheets on there and provide you the history of how those funds have performed in the past.
Yes.
But nobody can predict how they're going to act in the future. Yep.
That's
Well, shameless plug, fellas. I mean, we do a financial show. We've had investors and things on here that talked about that. So that's first and foremost. So hopefully we have educated people a little bit. And then secondly, one of the main things that we talk about on the show is the relationships. So each and every one of us come from financial institutions that deal with investments and things. And we talk about the importance of that relationship. So if somebody presents you with opportunity, you should be able to take that opportunity and go into somebody that you trust. And, as Tara said, somebody that you can sit down face to face and say, hey, what do you think about this? And they can look and walk you through the process, say yay, nay, or otherwise. And again, if somebody's telling you, no, you need to make this deal right now, you can't check it out.
Urgency.
That is a red flag. Another red flag that we haven't touched on is somebody saying that it's a secret strategy or whatnot. It's this real complex strategy, and I can't tell you about it, but it's going to work. No. Like Ryan said, when you sit down with a real financial advisor, they're going to walk you through it. They're going to ask you about your level of investing. Do you want to be a little more aggressive, or do you want to have safer rate of return? It's not hey, this is guaranteed. As he said, it's not a guarantee. They're going to explain to you and tell you about the certain risk. And if you want to play with that, they're going to, you say, I want to come in at a 10. Okay, so now they're going to put you in a little higher risk investment, but the return might be a little bit higher. But all that will be explained. So
when you mention secrecy on there, it goes the other way too. It's like they'll talk to you and tell you not to tell your friends or family members or things like that about it. This is a very secret investment. You got it on the ground floor. Don't tell anybody else about it yet too. So all red flags there. Another one, unconventional payments, how you're getting the money to them as far as investing. So when not just an ACH transfer, or you're putting money into a well-known established brokerage firm like Fidelity or something like that. But hey, I'll take this. You need to send it to me in the form of cryptocurrency or in the form of a wire transfer or something like that, to where, well, the reason they're asking for it that way is because it's either untraceable or it's not coming back to you once you
Johnny
wire the
Cash.
funds.
You left Johnny Cash.
Back. Yeah. I'll take cash for that investment, right? So be aware of some of those type of things.
Yeah.
Yep.
And another thing would be also check payments. If somebody's writing a check, it needs to be going to that broker. So let's say if you're investing with broker ABC, the check needs to go towards a broker ABC and not the actual financial advisor. Something else to also note would be access. So if someone is really investing with a financial advisor or just with an advisor, yes, they would need to have access, whether through online banking or what a form of access that would a person have. And a lot of people who are commonly preyed on would be more so seniors, because with seniors, they probably may not use online access, but do they have a trusted contact that they can add on to to their account that can do transactions for them. And a trusted contact is not, because most of the time when I interact with older clients, I always ask the question, do you have a trusted contact? And they would say, I don't want to give access. And, it's creating awareness that you're not really giving out access. You're just adding someone that you trust who can overview what you've done and can help you make decisions. And so a good practice would be always, if you have a trusted contact, if you don't know much about investment, go with someone that can guide you with it. And if they can be added as a trusted person, that just gives them access to overlook and see something. Client a best interest worksheet, because a lot of people an advisor always owes you to act according to the client's best interest. And a good advisor would really have what is called the best interest worksheet, where they detail the type of investment they did, why they did that, and that has to be based on the needs analysis. So what that looks like is, I meet with Terrence. Terrence tells me, I have money ABC. What is this money for? What is your risk tolerance? What are you okay? What is the time frame for this money? And based on my needs analysis, I would then recommend something that we both agree on in terms of risk tolerance and things of that nature. On that client interest worksheet, I would detail that. To create a really good understanding, one, for Terrence, also to make sure that also we're very clear on what we accomplished today. And so that is also very important for people to know that, yes, you may meet with an advisor and they may have some sort of high-level key conversation that we may not understand. But when it really comes to that client best interest worksheet, it needs to be very simple in a way that you understand. And if you don't understand, then you have no business investing in. And also pay attention to fees. What fees do I have with this? What advisory fees do I have? And also, in case I need to get my money out, how soon can I get it? Because you see people invest their money, they would even get shocked with a 3 average day trade time frame. And in a lot of Ponzi schemes I've experienced where people invest the money, but now getting it out that's the difficult piece. You never get it out, or they discourage you from even putting a trade in because they don't want to give you your money back.
Yeah. JJ, you want to jump in?
Yeah, I was one of the things that you said the seniors or the elderly, when we're talking investments, I think elderly fall prey to different types of scams.
Yeah.
The investors are your middle age. I think you said it earlier, people that are trying to stretch their dollar. How can I, build my nest egg? So therefore, if somebody hits them with a get rich quick scheme, I think they're more privy to that. But yeah, the seniors are the ones that'll hit you with some scams and try, to get money that they know that they have.
Yeah.
But my question too, for you guys in retail, how do you handle somebody that comes in and they say, hey, I need to pull out X amount of dollars. I'm going to got this investment. I'm going to build some condos in Arizona because somebody told me, about my rate of return. How would you guys handle that situation?
I'm just going to go ahead and jump in on that one. First question that I ask, of course, in terms of them taking out cash, depending on the dollar amount, that's where the flags start to flicker, of course. When people come in and they ask for upwards of like $10,000, et cetera, first question is, what is the purpose of these funds? Of course, we will run into several instances where people are not willing to share what they're doing with the funds. That is perfectly fine. You can tell me that you're using it for personal use. I truly don't care what you use your money for. At the end of the day, my job is to prevent any type of fraud or scam from taking place before you take your funds and exit the building. One thing that we do is pretty much we let them know that once the funds leave the building, we are no longer liable for what happens. So going back to relationships, it's easier to have difficult conversations with people, especially if it's out of their usual transactions, or this is something that they've never done before, or it's close to them almost wiping out their entirety of what they've had saved for a one-time thing. It's like, hey, we've had several conversations. We have an advisor here physically in branch, with all due respect, I'm like, you've never given him 5 to 10 minutes of your time to even let you know what we could potentially offer you. Now, all of a sudden, now you need to withdraw majority of all your cash because you think that you're about to win big. Of course, if you're about to win big, I'm happy for you. I want you to win big. But at the same time, have you done your research? Do you know that this is a verified source? Do you know this is a verified brokerage? can you prove that you know that once you invest this money with this company that you've never told me about, that you're actually going to get a return on it? I've had instances where people have come in and they've wired $30,000+ out for a down payment on a house. They were scammed. I've had people come in and literally go get cashier's checks for hundreds of thousands of dollars to go give to people, and then they'll come back to me with a look on their face like, oh, I've just thrown away my entire life savings. The importance of having the relationship and having the conversation. I'm not asking these questions because I want to be in your business. I'm asking you these questions to potentially prevent you from making a bad decision. So in terms of people wanting to come in and withdraw large amounts of cash, we do go through that process. We do ask them, what is the purpose of using these funds? Do you know this person? How do you know this person? Why are you giving these funds to this person? They're all things to pretty much try to help them piece everything together. If it doesn't make sense to me and it doesn't make sense to you, why are we doing it? At the end of the day, the only thing that I can do is inform my clients, let them know potential risks that come along with it. But at the end of the day, if they want their funds, I do have to give them to them.
Yep. I agree exactly with what Terrence, especially what you finished up with there. At the end of the day, it's their decision. All we can do is kind of help them with it. I have similar experience with a client that was, wiring large sums of money to this business out of Indianapolis, and within inquiring, talking to him about it, he said it was for real estate investing, and he told me like, well, they're paying me 4% a month, right? Because I'm asking like, hey, I can get you a CD for that. That's 4% a year. He said 4% a month. So I was like, so anyways, long story short, it just kind of inquired a little bit more into it, the name of the company, all this, and went and did my own research online to kind of help protect them and see how long they've been in business for. Are they registered with the state? Are there comments out there about their business and what they do? And so they've been in business for a long time, everything to be legit on the up and up. So all I can do at the end of the day is express the concerns, make sure that they're careful in what they're doing. And at the end of the day, it's their decision to make. But we're just there to bring awareness to it to help protect them. Yep. Not always right. We're not always wrong either.
No, but the bottom line is you guys provided an extra level of due diligence, and that's the thing. That's the key. It's a sounding board, a different set of eyes and ears to look at.
I will say partly that is because in my past experience, I've had instances where they have taken out the large sums of money and they've gone and they've practically thrown it away. But who do they come back to?
You.
Yes, you're going to come back to me like, well, I lost this money and what are you guys going to do about it? I'm like, well, what do you mean? Like, we had the money. We were holding it for you. It was in your account. You took it out. Yeah. And then when I asked you questions, you weren't willing to share information with me. I've done my job. I've tried to help you. At the end of the day, we do have to take accountability for our actions.
Absolutely.
And that is why we like to have those conversations. It's not because we're nosy. We want to help you. At the end of the day, if you've worked years and years out of your life and you saved up thousands of dollars and then it takes 2 minutes for you to throw it away and never get it back, I mean, I would be extremely upset too.
No one should care about your money more than you.
Right? Exactly.
Yeah, somebody's trying to help you protect it, accept that. I want to go back to real quick, Ben, when he was talking about financial advisors, on that topic and interviewing them, things like that. Is one of the biggest things is all financial advisors should be registered and licensed, right?
Yeah.
So you can research that, go out and look at their history. If they've had negative lawsuits or reviews and things like that from previous people that have invested with them. I had one of those experiences recently as well, where we had a client that we started talking to him about some things, uncovered basically that the advisor that he is with had been doing what they call blanketed recommendations, which is he was selling the same investment to everybody. And that's not everybody has the same investment needs or strategy. For instance, this specific investment was more geared towards somebody in the retirement years, older. This person was nowhere near that. The reason that they were doing these blanket recommendations, because they were high producing fee type investments. So for the financial advisor, it was in their best interest to sell this. For the consumer, it was not their best investment opportunity to get in. But ultimately, when we did a brief review of his financial advisor's past, there was multiple complaints and lawsuits for the exact same reason that we're uncovering. That information was out there. It is public, but most people don't know that and don't do that when they go find a financial advisor. They're sitting down with somebody that somebody else may have recommended, and ultimately, they don't do their due diligence and they fall victim to something. Everybody's happy until they're unhappy, right? Somebody may be happy with their financial advisor now because they're not aware of what's going on. 5-10 years from now, they realize they've been getting scammed this whole time, but they've brought multiple other people there. So go out and kind of do an interview with them in person and also look into their background.
That's funny though, that picture you just painted, like you said, that's a gentleman who was licensed, but he wasn't a very good advisor. there's so many instances that we talk about relationships, that people have relationships with somebody in their community who has a great idea, who they have this going on, that going on, and they're going to do these great things, and people trust that person.
Mm-hmm.
So they're not going to show up on your investor.com. They're not going to, they're not going to be anywhere in the SEC website or anything like that. They're just somebody that, hey, went off to college a couple years, comes back. My mom, dad, they trust them. They've been in the community. They got their business owner. They've done some things, and people are getting off in some of those type of discussions and investments. Again, I just say, that due diligence, trust, do your homework, understand, the ramifications. And
I think traditionally any of the big major Ponzi scams, those people that are heads of those, they're in the community, right? They're very well-known people. They have contacts high up, right? Because they're charismatic people, they're personable people.
Yeah.
Doesn't mean they're good people, right? They're out there for their self-interest for doing that. So just because in the community and a nice person doesn't mean that they're not going to, you shouldn't be aware.
It can happen to anybody. I mean, you think about some of the high-profile folks that fell prey to Ponzi schemes and some of these crypto frauds that were going on. I mean, they're Tom Brady and actors and actresses, everybody. So I mean, it can happen to any and everybody. But I think our main message here is just making sure you do your due diligence, you do your homework. Don't just take somebody's word or face value. Research everything. And if they say you can't research, that's a red flag. Walk away. I walked away from stuff anytime, and I'm that type of person. If you tell me I got to do something right now, yeah, you don't need to talk to anybody. I'm good. I'm good.
Yeah,
I'm walking away.
If you want me to talk to somebody,
Yeah.
I shouldn't be talking to you.
Yeah.
And it really doesn't even have to be a scam. I think when it comes to choosing a financial advisor is someone who works with clients, who simplifies information, who gives different options, not somebody who just says, this is the way. Also, if someone is really investing, is really making sure that they understanding, I mentioned earlier, fees, and really understanding the fund actual fee and the actual advisory cost of that advisor. And being able to take time, if you don't understand it, take all the materials home and evaluate and do research to make sure, or go to a different financial advisor and say, does this make sense? Or this is how much I have. This is what advisor so-and-so has recommended. What do you think of this? And what other options do you have? Or even asking a family member. However, if you don't understand it, never be in a rush to invest into something that you don't understand. Ask for all the materials you can get. When it comes to investments, there's the fund fact sheet. Get that. Get a client best interest worksheet on why he's investing. He's recommending this for you. Understand the expense ratio on that fund. Understand advisory fees on that fund. Past year returns, and then take it home. Make a decision. Come back a week later. I love when I interact with clients. They take everything and they say, "Oh, I'll come back next week," or "I'll think about it," and I give them the freedom to really choose that. Also, when it comes to insurance, making sure that people also understanding insurance products, understanding surrender charges, fees associated with those, because there are just good investments out there, whether that's through just straight investments or insurance, but also making sure that people are aware of in terms of access. For instance, if it's an annuity, is there a return of premium? Are there surrender charges on that? Is there an initial rider that is with that you're paying for? Just to create awareness, because I've also heard people say, "Oh, I've invested in this account. It's stuck for long. It's a long-term account for 3 years, 5 years. I can't get anything out. If I'm to get anything out, I would pay a surrender charge." So making sure that you understand whether it's guaranteed or not guaranteed. What are the fees? What are the advisor commissions on this? Can I get alternative options also? Can I get 3 recommendations? And in terms of access, how can I access my money when I need it? And are there surrender charges or penalties when it comes to getting my money back?
Absolutely. So, gentlemen, great conversation today. Bring a lot of awareness out there to our viewers. Before we get out of here, JJ, anything community that you sense next workshop, anything like that you want to share?
Not off the top of my head. That we do have a soccer camp going on, soccer and flag football, 10 to 12, out at the site of our new center that we're going to be having. But Maple Grove, 10 to 12, bring your kids out. It's free of charge. A lot of good instruction going on. Good time to get kids out the house. I actually talked to some kids last week, to some parents, should I say, and like I told them, anytime you got an opportunity to get these kids from in front of the TV, off their gaming system and all that, get them out there. 2 hours a day is for free. Today is Wednesday, so it's still a couple of days left, and I'm sure they're welcoming everybody.
And when they're out of the house, don't let them take the tablet or phones with them. Leave them at home. Okay.
That's right.
So, all right. Thank you for joining us today. We'll be back in 2 weeks. Until then, we are Our Neutral Voices. Peace.